a bank in Switzerland, and a lot of these new vehicles are new to me as they are to everybody. But we tokenize assets. We're based in Dubai, but we're global. Whether it is mines, real estate, or Picassos or Leonardos, all of these assets will fall under some of these vehicles that were discussed. So I encourage you to speak to our panelists because they really have a lot of knowledge and it's very, very good. So we're now moving to another panel on stablecoins, digital payments, processing, acceleration, and adoption. This is very interesting because it's the follow-up to what we just heard. So we have the moderator, Maria Vovchok, if that's the right pronunciation, Chris Seifert, and Sam Kazemian. Can you come on stage, please?
Hello. Hello. Thank you. Hi, everyone. So please welcome once again digital payments and processing, acceleration of adoption. Really welcome. Please give it up to Chris Seifert, Head of Marketing at Alfacash.
Hi.
Sam Kazemian, founder at Frax. And I believe one of our speakers is coming, and I actually know him, but I still haven't seen his face. I really hope that Kumar, Gaurav, founder and CEO at Cashaa, will be joining us shortly. Maybe he's right now somewhere around. I am Maria Vovchok, Managing Director at World of Web3 Summit, or in other words, WOW Summit. If probably you have heard about this, we're also expecting you on the 14th at our conference. But today, we're going to talk about, as it was mentioned earlier, about digital processing. And one of the things interesting, I believe, for you would be to know as well that Sam is also one of the co-founders of Everipedia, which probably everybody heard as the first decentralized online encyclopedia on the blockchain.
Yes, and Teddy is also a co-founder of Everpedia.
Oh, really nice. And actually, guys, I'll start with Sam, but I would like in this case Chris as well to add. If, for example, today, we'll go there, but for the audience, to get you know better, please tell us, do you believe your business quality number one, which helps you to run your business in a good way? Or maybe not only one skill. So just for the audience, to get to know better our speakers, I really want, in this case, I would want you to share what do you believe are the sets of business skills that you have to run your business successfully?
Yeah, sure. I guess there's a lot to it to run a successful crypto business, and we are actually sort of a traditional business with Alfacoins. We have an exchange, crypto to fiat, and we onboard merchants to the crypto ecosystem with a small tool that allows you to receive crypto. And for all of this, I think...
No, Chris, I understand. But in this case, I'm asking you, for example, when we are doing our business, we need to have certain set of skills to run business successfully. So please share. I really want, because every panel that we are having, in this case, I really want the audience to get to know who are on the stage and what they are doing and how they are running the business. So who you are in this case, Sam, because in this, as a businessman,
okay, I thought you were asking a bit about how you build a team. You need all kinds of different skills, but you're asking about myself, right?
Yes.
And I guess it's all kind of random how we all got started in cryptocurrency, some recently, some time ago. And for me, it was 6 years ago, I got into Bitcoin, Ethereum, and so on, a little bit in mining. And I learned to code by myself and just build some small tools. And with that, you just get interested in the different challenges to solve with cryptocurrency. And with that, you go to conferences, you meet people, you make connections.
So it's networking. Okay, one thing.
Networking.
Making good networking. What else?
And I think just to see the challenges, right? To understand and we heard it before from different panelists.
Yes.
That you need to see the problem that you want to solve, right?
Okay, so problem solver in this case.
I guess.
Quick problem solver. Am I correct?
Right, and then maybe one more important thing is that you actually need to get stuff done, right?
Okay.
Like in crypto, everything is sort of an experiment, and you need to build like small things and just test them out, iterate them, and then see if it's a good business.
Okay, Sam, in your case.
Yeah, I think the most important thing starting out is a co-founding team that supports each other and complements each other really well. Like for
So
example,
it's being a good HR.
yes, that's a good way
Okay.
to put it. And so all my co-founders are here. They're supporting me. Travis, co-founder of Frax, Teddy, CEO at Everpedia, Roberto, who's here with us all the time. And so it's really important starting out. Everyone has technical skills, other skills, and complementary skills that they're in it together, you know, until the end. So Frax is my second company after Everpedia, as you
Yes.
said. In total, we've raised over $40 million across all of our projects. And Frax is actually extremely profitable. So the protocol is on set to make over $50 million of annual revenue per year, which I think, you know, is one of the most profitable DeFi protocols and stablecoins in the space.
I see. So coming back to the topic, as I mentioned earlier about Everpedia, guys, if you had today to write an article on Everpedia about digital payments in 2021, what would it be? Let's figure out the key points in this article.
Well, I think, you know, since Frax is actually an algorithmic stablecoin and we're in the space as well, I think the most important thing for digital payments is seeing where the stablecoin space is headed, where stablecoin innovation is going, and exactly what kinds of stablecoins are going to be leading the settlement, remittance, and payment space. Because one of the most important things for DeFi is, can we actually build decentralized stablecoins and fully on-chain stablecoins? Because a lot of projects basically currently are trying to solve the regulatory issues, right? The issues that you can't just be like Tether or USDC if you want to completely revolutionize the stablecoin space, because you can't just tokenize fiat in a bank, right? You can't just take cash that's in the classical financial space, print a lot of tokens, and then have that, because you're most likely going to be subject to the exact same regulations and the exact same laws as classical banking. If you're trying to revolutionize the space, you need to come at it from a completely different view, which actually is how Frax is designed. Frax is the first algorithmic stablecoin that is entirely on-chain, has kept a perfect peg. And for people in the audience that aren't familiar with algorithmic stablecoins, the difference between classical ones, which have fiat in a bank account, like Tether and USDC, is that algorithmic stablecoins change the circulating supply of the stablecoin on the blockchain using algorithms and equations in smart contracts. So all of the assets, the liquidity, and the exchange of the stablecoin is entirely on-chain, and it's non-custodial. There's no administrator keys on the smart contracts, there's no bank account, and there's no companies, right? And one thing that makes Frax really unique is we're basically the very first algorithmic stablecoin that's proven to work.
Yeah, thank you, Chris. What would be your article about?
I think would be mainly about like the timeline, and I think that in this year it's like the time where maybe crypto payments is the first real-world use case for crypto, right? Like the panel before talked about tokenization and so on. I see that as like one side of the equation is like the $2 trillion crypto market, like NFTs, DeFi, and everything. And then on the other side is like the real world. And what's connecting that is not too much. And there's like projects trying to tokenize houses, real estate, and whatever. But payments is something you can actually grab, right? It's just sending money to other people for services, for example. And that's what we see this year, that it's actually technically solvable, like with like stablecoins and with scalability and so on, layer 2s. But also there's like a need, and people in developing countries do like remittances. It's like $100 billion market, right? There's like online businesses that accept cryptocurrency because they're in sort of a niche, like casinos, gaming, gambling, and so on. And we just see that sort of starting. So I guess like before this year would have been like a really small article, but maybe in the next few years it's just going to explode, I think.
Yeah, thank you, Chris. And by the way, as I mentioned earlier, Kumar has joined us just right now. So please give it up to Kumar Gaurav, founder and CEO at Cashaa. So the question earlier was, Kumar, as far as I mentioned earlier, Sam is one of the co-founders of Everpedia. Probably you've heard the first decentralized encyclopedia on blockchain. So if you could write right now an article about digital payments in 2021 on Everpedia, what this article would be about?
I think one of the first thing in this article will be that now we have a very strong payment network, Bitcoin, which we never discussed, and no, for a long time it has been undervalued.
Yes.
But I think in 2021, it has been very much clear that we have, on this Earth planet, we have one of the strongest payment network, which does not require any central authority to regulate it, control it. Does not matter how much power or money you control. We have a pure decentralized system working in shape.
Yeah. What else? Here, I would like to add, taking into account the current developments, one of the biggest markets ever banned crypto trading at all. There's no any more gray area in China about crypto trading. How does it, and you cannot even trade crypto to Chinese citizens anymore. It's not even about only China, but Chinese citizens. How does this and other similar developments are influencing the history of digital payments in 2021?
So when we talk about payments, there is many more components, right? For example, I think it's more easier to understand from the network which exists today. So to run any kind of monetary network, you need a central bank which issues that currency.
Yeah.
Then you have a payment networks. It could be SWIFT, it could be faster payments, SEPA, NEFT. What are the different payment networks? Then you have banks, maybe like us, which plays a role, which take the custody of your money and then use them, monetize on them, give some interest in certain jurisdiction, and then this whole and then you have actual user, which is the merchants, the actual users of currency, like you and me, paying for the beer, paying for the services. But one of the beautiful, and then you have a different regulations around it.
Yes.
That how the money is moved and how it should not be moved, whom you can pay, whom you cannot pay. The wonderful thing about when you start writing about this new decentralized system, and why I'm taking Bitcoin, because Bitcoin is one of the fully developed network when it comes to monetary system.
Yes.
This one network have all these components. So it's not just about payment. It's about how the money is being generated, how it's being circulated, and how it's being stored in our individual wallets. So I think sometimes we just devalue Bitcoin by saying that it's a payment network, but it's actually a full-blown monetary ecosystem of the digital world.
I think Sam wanted to add something.
Yeah, that's actually a really good point, because this is actually a really good reason why decentralized stablecoins complement something like Bitcoin, because as you were saying, is if you have a centralized stablecoin, it's only one layer of the payment stack, because the company, as well as the issuance of the token and the monetary policy, is entirely in one company. You regulate Circle or Tether, and the entire stack is gone, right? And to be more like Bitcoin means you have to actually have a more decentralized stablecoin, something like Maker or even like Frax, actually, which is more decentralized these days, because the entire supply and monetary policy is entirely dictated on-chain with algorithms. That actually allows you to have more of the payment rails, right? More of the monetary policy on-chain, more of the actual entire logic, the business logic of the protocol on-chain, so that there's companies that can build on top of it, but the company is separate from the actual money.
I see. Yeah?
Yeah,
Chris?
I love that analogy to Bitcoin, because always when we talk about the technology, we talk a lot about that it's censorship resistant and so on. But you can see the same parallel with like private persons and companies. And if you talk about China, you can especially see it, for example, with the miners that, they run a business, and if they want to continue to run it, they have to ship their hardware outside of China, and that's what they're doing, right?
Yes.
And that's what all companies do. Like, you have all these fringe sort of groups of companies that are the first to accept cryptocurrency. And if it works for them, then in 5 years, 10 years, it will work for everybody, right?
So we'll see what happened. Like in 5 years, we'll get back to the a bit later. But I'm definitely sure, as far as like you're representing very different regions, as far as you're like right now embarking on the Middle East market, you've probably been researching how people are doing their payments here, how they are starting to use cryptocurrencies. So can you please dwell upon, from your experience, what you have learned so far, how digital payments have been transforming in UAE and the Middle East region? And in this case, let's talk about specifically crypto digital payments.
If I have to be very honest, I think crypto payments is still not something which is a part of a regular payment ecosystem. And it's not only true for
Sorry?
It's not the part of the payment system.
Yes, but I mean in this case, because the digital payments cannot be only with cryptocurrencies.
Yes.
So in this case, let's first start from the cryptocurrencies and then move on to the general digital payments.
I think Dubai have pushed a lot of innovation. I think the banks are very much interconnected. Payments are done in, like, you have wallets. I think one of the evolution which happened, I think, in last 4 years in global banking, including in MENA region, is that payments started being more facilitated instead of bank accounts through wallets. In the beginning, this wallet, when it started coming, you had a small startups who started this wallet revolution, and then banks quickly realized it. And today, if you see, almost every bank have their wallet. Either they have acquired it or they have built it. So digital payments, especially in MENA or in any of the developed market, they are almost next to instantaneous. So, but if you ask me the evolution of crypto in these payments, I think that's totally missing.
Totally massive?
No, it's totally missing. It's not there.
So where do you see whether it will be there? Will it be there, and at what period of time? And what is needed for this?
It's a very difficult question, because we are going into a very complicated area. It's not as easy to answer. First, because as a user from me to outside, it doesn't really change much if I'm making a payment in crypto or a centralized system.
Yeah, why?
So, because it just doesn't change. Because as an individual, we have been programmed to believe in a government, to believe in a central authority money. And I think it will take a few generations to get out of this concept, to really start realizing that we as an individual can own and control our wealth. We don't have this psychology. I think everyone is sitting in this room. I think
can you raise the hand in this case? Because I believe that we have really different audience here. Somebody is new to crypto, as it was mentioned earlier. Somebody is already, maybe is using crypto every day. Who in this case, which probably, are you more crypto or not? And whether do you believe that you have to manage your wealth, having your own cryptocurrency only on your wallet, your bank on your wallet? Okay, one. Who else? Don't be afraid to raise your hand.
Yeah, please raise your hand. How many of you started using crypto for
payments?
payments?
Who has their own bank as their crypto wallet, and that's
Wonderful.
it?
Yes.
Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So far, okay. In that case, we at least know that they're part of our audience are already using crypto, maybe even every day, or at least they're managing their wealth in crypto, having their just a bank account on their phone. That's it. Okay, so it probably, I think it's 1/4 of our audience. What about?
I don't see, because it's still at a very early stage, because we are the biggest banker when it comes to crypto industry, right? Starting from Binance to Nexo to Huobi, almost every major player in the industry holds an account with us. And so that we can see what actually their users are doing, right? What kind of transactions are doing. So I think crypto is still at a stage where it's being more as a store of value and to transfer fund. It's not going into day-to-day payment. And there is a reason for that. It's a very valid reason. I would not like to pay for my coffee
In Bitcoin.
with such a volatile asset, right? Because I love my Bitcoins and I don't want to spend on the coffees, right? I don't want to spend on, I will rather spend my paper money, which is devaluing every year on year, to pay for my expenses today.
How about some stablecoins? Spend some
What about, by
stablecoins
the
on
way,
some
because right now, especially with the rise of CBDCs, it's the same like using the blockchain technology, it's the same fiat money, but in this case, you're paying like they have the stable value so far at least.
Wait, the moment you say CBDC,
It's already a different story.
it's a
by
very
the way.
different story,
Yeah,
and
yeah.
it's a centralized. It's again, you are trying to sugarcoat the same thing.
Yeah.
Right? It's
No, but because if you
Stablecoins-
mention fiat
okay.
money, it's the same. It's the same, only you have it on your phone, for example, as well.
yeah, you have your phone, but the value is again. So if we go to the fundamentals, why Bitcoin being successful? Let's go back to the fundamental.
Yes.
The Bitcoin being successful because A, nobody controls it.
Yes, that's
The
true.
value is decided by the market, so the actual participant actually decides the value.
Yes.
And then you have all the technical jargons on top of it. It's open, it's
On 9
decentralized, blah, blah,
pages,
blah.
you can
But let's
read.
go on the real. So why I love my Bitcoin? Because I know that no government can confiscate that, right? Number one point.
Okay. Number
Right?
2.
Number two, I can move it instantly anywhere
Yes.
without anyone's permission. Now, the moment you put in any kind of central authority in between, it could be the CBDC or a central bank or any kind of regulated, you kill almost both of this innovation. Neither it's in my control anymore. Yeah, it gives me the assumption like how my bank money is that it's in my control, but it is not. Second, again, the value is defined by the issuer itself that it's going to be the value.
Yeah.
So that's why there is a big, I'm not saying the CBDCs are not useful. Yes, it's useful to create an open, transparent nation system, nation monetary system, because today we actually don't know how, what kind of things is going when these values of the money is being denominated. Like, for example, we have seen during the COVID time, US has started printing trillions of dollars.
Yes.
Now, what's the banking? What is like, I usually ask myself, is the Bitcoin is getting expensive or our fiat money is getting every day devalued?
Oh, by the way, really valid point. That's for sure.
I feel it's the other way around. My Bitcoins are not getting expensive every day. It's the regular money from which we are buying is getting devalued every day because we don't have any control on the supply.
I see. So in that case, Sam, you wanted to add something.
Yeah,
It's not the price of Bitcoin is like volatile.
So
The
this is
price
the-
of
this is the
fiat is
perfect
volatile
actual-
towards Bitcoin.
We just as a small example, I think our FX division was trading massively in pound and US dollar.
Uh-huh.
And we have seen a volatility up to 12 to 13% between these two biggest nation currency. First is the Britain and second in United States dollar. 10 to 12%. How is that possible? What's happening there?
Well,
It's a
at
lot of
least-
money, right?
Yeah.
Right. I
Sam?
mean, but at least you like to spend it on the coffee, right? Bitcoin is too expensive to spend on coffee. But what I wanted to say is I actually totally agree. That's why what we do at Frax, for example, is entirely trying to solve this problem of Frax has no issuer for stablecoin. It's entirely on chain. It has all of the collateral and all of the algorithms that change the supply of Frax entirely on chain. It's all open source. And so we actually are trying to solve the exact problem that I agree with you is exactly the main issue is for stablecoins there's usually an issuer, right? Tether, Circle, USDC, these all have issuers, right? And so with Frax, it's the first algorithmic stablecoin that's actually kept its peg perfectly. And so what an algorithmic stablecoin is if the supply of the currency is too much, it retracts the algorithms, buy back the currency, and it restores the price to $1, right? To match supply and demand. If there's too much demand for Frax and you can just mint dollars into the actual blockchain and buy collateral, then that brings the price back down to $1. And it's very difficult to actually get this supply and demand algorithms correct on chain, but if we can, which so far we've done a pretty good job, everything is open source, there's no issuer, and it's trustless. No one can seize your Frax stablecoins. And so far we've actually done about 400 something, around 400 million of Frax supply, and we make about, by we, I mean the entire protocol as a token holders, make about 50 million, 55 million dollars of annual revenue. And so that revenue actually goes back to the Frax share token holders, the FXS tokens. So it's a very self-sustaining, profitable, and really interesting new protocol. So as I totally agree with you.
Thank you, Sam.
I just want to give
Chris.
a brief comment on what you said. Like, I agreed with most of the stuff about the devaluation and increase in Bitcoin price and so on. But I think when we talk about like payments with cryptocurrency, it's important to view or to take the view of like individuals who often just need to send, money home to their parents into another country, and they don't care too much if, US dollar is devalued over a year, 2 years, and the same for Bitcoin, right? They just want to spend like as little fee as possible and have it as secure as possible with like little fee. And what we see as like a service provider is, and you mentioned the UX before of crypto, right? Is that there are these service providers in between who just use Bitcoin as this layer to send money, but on both ends for the receiver and the sender, it has the same UX as like a bank account, which like my mom could use. And I think that's one of these problems which is getting solved right now. Like one is volatility with stablecoins, other is like scalability, but also the user experience, right?
Thank you, Chris. Kumar, you were going to add something or not?
No, it's no. I would just. I think if we have something which is stable in value, and how you were mentioning about the Frax, I think that solves quite a problem for people. If you have a crypto which they can control, not controlled by someone else, and is also stored in value, I think that can start contributing into a payment system where people can actually pay for it. But how do you acquire this token? Like you go and buy on an exchange?
Yeah, and in fact, the algorithms on the blockchain constantly look at the price, the exchange rate of Frax against assets such as Ethereum, Bitcoin, USDC itself, and things like that. And so
does its volatility not depend on then the underlying assets?
Well, it also owns collateral, which it uses as liquidity for the exchange rate to make sure Frax's exchange rate is always $1 compared to everything else.
Okay, I have to
and so there's no active, there's no actual active reserves of fiat currency or anything off chain, right? No like gold, no anything else. Everything is auditable on the blockchain. Everything is done with algorithms, and so you guys might have heard of algorithmic stablecoins as a type of stablecoins. A lot of them have been attempted. A lot of them have failed because it's a very difficult thing to get right. One thing that we always like to say with Frax is it's the only algorithmic stablecoin that's launched that's held a perfect peg. So it's been about 9 months since we've launched, and we've actually never broken the peg. And by peg, we mean 1 cent on each side at least. So 99 cents to $1.01, only 1% performance on each side. So very proud of that, and we're the only one of algorithmic stablecoins that can say that.
Thank you, Sam. Actually, we are running out of time, and I know just one quick question. I believe from the audience there will be questions as well. Gustavo as well? Yes?
Yeah, we're running out of time, and so
maybe 1-2 questions, and I'll finish with one
I have
last
a question for you.
Okay.
So correct me if I'm wrong on what I'm going to say. To the best of my knowledge, today in the UAE, there is no bank that legally will take my crypto in custody, and there's no bank that will do fiat to crypto, crypto to fiat. That's the best of my knowledge today. Why is this happening, and when is it going to change?
Well,
Why this is happening? The question probably more to regulators.
Yeah, it's.
I mean, there are peer-to-peer exchanges, right? Like you could exchange your crypto into a service. But what do you want to...
That was not the question. Question is a bank.
I'll take this. It's okay. Because I think that's what we do. We started banking, especially crypto economy, since 2019. I think on the same month when Barclays shut down the Coinbase account. I clearly remember it was August 2019. That's when we started operations in UK, when we started accepting businesses as our customer. And we started also giving them the custody service. So if you are an exchange, you want to keep a custody, or if you are an IC or another token-based company who want to keep their funds which they have raised in Ether, Bitcoin, or US dollar or pound, they can keep with us. Like any other bank, we give the banking infrastructure and the conversion. So I think the thing have already been started and it's progressing. Yes, it is not true. What your knowledge is 100% true. In Middle East, there is no one doing it. But because we already started doing in US, we already started doing in Europe, I think we are seeing maybe a couple of months, maybe a year, that you will have someone opening up here. And I know someone is already working on
if I'm
this,
not
and very sure it will
if
be.
I'm not mistaken, there's already one Bitcoin fund open here. This is one thing. Additionally, we recently heard what was happening. The recent agreement between Securities Commodities Authority, World Trade Center,
Maria,
about crypto trading.
that was not the question. I'm asking a specific.
Yeah.
You have to realize, I was the CEO of a bank in Switzerland.
Yeah.
I was in the board of directors of a private bank there. I'm an ex-banker that moved into the blockchain environment many years ago because I'm an engineer by training. That's why. So there is no bank doing this today. Is that
No,
correct? That's
is
the
it-
question.
It's correct.
All right. So we hope it's going to happen soon. I would like to be able to take crypto into a bank, regulated bank here, and have fiat crypto anything. But I'm not here to do my own questions. I'm opening into the floor. We have 3 questions before we go for the coffee break.
Hello, I'm Nagaraj from India. The question is, if it is converting into a fiat, what is the model, like, in which way we can,
Can you ask again?
no, if you wanted to convert into a fiat, so which model, like, it is like it will be encashed with a Visa, Master, how it will be integrated?
No. So for example, I assume from which country you are?
From India, Bangalore.
Oh, so wonderful. So if in India, we just started experimenting with a brand called Unicash. And what we are doing is that we are issuing local bank accounts. And in the same account, when you log in, you will see also the Bitcoin address, which means through any of the Indian banks, you can move money in and out through your account number, which is integrated to the regular account. But you also have a Bitcoin, so you can deposit your Bitcoin and you can convert them, and the fund will go directly into your bank accounts, which you see there. So it does not require, because Visa and MasterCard are the payment networks for the card facility. It does not need it. Once the funds is in the bank account, your bank account is connected with any of the card provider. It could be Visa, it could be MasterCard, it could be Union Pay, it could be American Express, so you can spend it. But you can also have startups or businesses which can directly sell your Bitcoins and deposit into any prepaid card. It could be Master or Visa card.
And the question is, when it comes to that, the taxable, like, it will be on the regulatory of a particular country, or how it is?
So I'm not a tax advisor, but just in short, it does not change anything for the tax perspective. Once you are taking money in, it's an income which you are incurring, either in crypto assets or in gold or in euro or in INR. You have to report that, you have to file taxes on that based on, and there is enough tax infrastructure which is built. I don't think for a crypto, maybe you will agree, because it does not require a separate regime or rules and regulation for that.
Second question, please. Give the microphone.
So this is like a prediction question. So assuming like the traditional finance like industry gets replaced by crypto in 20 years, 30 years, like are you going to be using Bitcoin or stablecoins to pay for your coffee? What's your prediction?
Oh, definitely. I will love to do that.
Which one?
See, because it's a prediction, so I don't know what is in the future. But as I see today, I think Bitcoin is one of my safest bet.
So obviously, I think hopefully people will be using Frax to purchase coffee and everything else. But I actually think that Bitcoin will be used as kind of an on-chain reserve asset for different algorithmic stablecoins. Frax was probably not going to be the only one, but Bitcoin will kind of be the gold, and there will be algorithmic stablecoins of many different flavors, some pegged to the dollar, some even new units of account, and those are what people will be using to purchase products and things like that, and Bitcoin will stay as the unit that's a store of value.
Chris?
All right.
Yeah, I paid for my flights to Dubai with ETH.
Right.
So,
That's
yeah.
a great answer. Yeah, fantastic. Any more questions? We have one more question. If you have any? No?
If not,
1, 2, 3. Please go.
if not, thank you so much. Just very quick question at the end. I don't want to go so further in 20, 30 years. It's too much. But I really hope, what do you think in terms of digital payments, how it will happen with the job inclusion, financial inclusion in the following year, just 1 year? Like more people will be embarking on this, more people will be, in this case, finding their jobs, helping with this. Somebody from the banking sector in the past, they'll move into crypto.
Well, I think it'll be
similar
bigger than
companies
the
like
internet.
Frax.
Yeah, no, I
Or-
mean, I really do think there will be more people employed in the crypto sector than the Web 2.0, the internet sector. I do think so, because it's so much about rewriting value using software.
You know,
Yeah,
I can just compare it with the analogy. If you see crypto or blockchain, it's a very, very new innovation. We don't know how it's going to evolve. Today, because it's mostly used for money, so people like him and we are in the space and seeing what we can do, and then different kind of innovation like these kind of things are coming up. If you see the internet, when the internet came also, we didn't know how it's going to employ anyone. We really don't know like what's
Do you
going to
believe?
happen.
Do you believe blockchain is bigger than internet right now?
Definitely, because it's controlled the money network. Anything which controls the money network can definitely be bigger than anything in the world, right? Because that's one language which we all understand, irrespective of color, religion, caste. Everyone understand money. So
I can give you my prediction. I think that, and I say this in all my conferences, anybody who's below 40 years old will be using cryptos within the next year or so, no doubt. And within 5 years, in my opinion, every single company in the world will be using crypto or will be on some way or shape of blockchain technology. I would like to thank the panel
you
for
so
this
much.
fantastic
Please.
presentation.
Give it up once again to Chris Seifert, Head of Marketing at Alfacash, Sam Kazemian, Founder at Frax, and Kumar Gaurav, Founder and CEO at Cashaa. I'm Vovchok, Managing Director at World Web3 Summit. Thank you so much for watching and enjoy Gulf Blockchain Week.